It's about that time of day again. My name is Joseph. Tuesday evening, November 6th. Welcome back to your nightly newsletter. My job is to help new traders just like you earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil, oil is bearish and sitting at major support. So the plan is to look for selling opportunities, but instead of selling into support, I've got my eyes on two key resistance levels to sell ahead of the weekly inventory report tomorrow morning. The S&P is bullish with a strong move higher to finish today's session. That tells me to look for buying opportunities, and I've got my eyes on some traps down near the low of the key bull channel. Nasdaq is also bullish, but we're trading into major resistance on the Nasdaq right now. So I'm waiting for either a deep pullback to allow me to buy at support tomorrow or another strong leg higher so we can look for a hidden channel pullback. Gold is bearish and trying to break out of a weekly range, but I don't trust this yet. So I'm looking for buying opportunities, but I have to wait for that nested two-try failure pattern going back up to retest the high. You definitely don't want to miss that gold chart, so stay tuned on that. And of course, wrapping up tonight on the euro is bullish with a spike in range of its own, and that tells me to look for buying opportunities below the range low, and I've got my eyes on the two-try failure pattern for that euro tomorrow. Well, we're almost out of the woods on the election. Tomorrow is probably one of the most unpredictable sessions I've worked with all year. But as always, that's not going to stop me from putting the plan together for you guys. We got a big election results coming in as we speak right now. Anything can happen tomorrow. I'm going to make sure you are ready. Before we jump into this newsletter, though, before we open the charts and put the plan together tonight, I do want to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire trading strategy. It's written out right here on my blog at Sideways Markets. I'll leave all the links in the description of this video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing to our channel. And when you do, hit that bell icon so you get notified every time I post another video. And of course, don't forget, if your goal is to become a consistently profitable trader, you can get that process started by joining our mailing list. All I need is your name and your email address. Make sure you hit subscribe, and I'll shoot you an email every time we publish something new. Also, don't forget, too, you can download all the charts from tonight's video. They're available for download right on my blog. If you're on the blog right now, there's a big button right below the video that allows you to download all those charts. If you're on YouTube right now, I'll put it in the link, the description of this video. And don't forget, if you have any questions, you can always pick up the phone and call us in the office toll free anytime you have any questions. I look forward to answering your questions every step of the way. All right, hope you guys had a great day out there. Tuesday was a big success in our trade room. Hope you had a great day as well. But as always, we're only as good as our next opportunities. Let's get ready here for tomorrow. Tomorrow's Wednesday, November the 7th. And of course, unless you've been living under a rock the past few weeks, you know we have a very highly anticipated election happening literally as we speak. I'm a little bit late here tonight on this video, and I believe that polls are closing right now on the East Coast of the U.S. So we've got a lot of uncertainty over the next few hours as we roll from East Coast to West Coast, get all the votes counted up. And you would think that a midterm election like this is not going to be that big of a deal, but boy, oh boy, has it become a big, big deal. We saw a lot of low volume markets today, and we can definitely tell that everybody is kind of waiting by the television, waiting to see who's going to claim victory right in the Senate and the House. And of course, we expect to have big repercussions for the stock market as we go into the end of the year. So a lot of people are kind of walking on eggshells right now. Anything is possible tomorrow. What we do know for tomorrow is by the time the opening bell rings tomorrow, we will know the results from tonight's election. The big question right now is what else do we get tomorrow? And we're going to put that plan together in a second. What we also know here is we got some major news on the calendar here for tomorrow as well. Tomorrow, the FOMC meeting does begin. Don't worry too much about that tomorrow. We'll worry about that tomorrow night on the newsletter because it will start affecting us on Thursday afternoon. really the only major news that we want to be concerned with tomorrow. If you're in Europe, you got the retail sales number at 5 a.m. Eastern time. If you're in the U.S., we've got the petroleum status report, what we call the weekly inventory report for crude oil traders. So we got the news coming out tomorrow morning, 5 a.m. retail sales. You definitely want to be watching the euro, watching the gold. Those will be two markets on our radar tomorrow morning, along with all of the, right, obviously the stock indexes, right, the bund, the bottle, the bucks, right, and the FDAX. But most importantly, though, tomorrow, if you're with me tomorrow in the trade room, trade the U.S. morning session, we had that weekly inventory report at 10:30 Eastern time. And as I always remind you, when it comes to Wednesday mornings, really it's all about finding those trades before 10 a.m. Eastern time. Because when the news comes out at 10:30, it can oftentimes be really nasty, right, around that news. What I'll do is I'll give it till about 10:45, and then we'll start to see if we can get some sort of structure that we can work with. Sometimes we get after that 10:30 news and the market is just such a sloppy chart. It's very difficult to really put any plan together. And of course, we go into lunch and things don't get much easier for lunch. So I always try to give myself that buffer. 10 o'clock is my cutoff. Again, this is just for oil trading, right, on Wednesdays when we have inventories. 10 o'clock is my cutoff. It just gets too slow between 10 o'clock and when the news comes out at 10:30. Let the news comes out. Give it 10 minutes, 15 minutes. See, do we get some new channels? Do we get a new range? Or do we confirm the range or confirm the channel? Once we see kind of the aftermath of that news tomorrow, then we can, right, dip our toe back in the water and look for some more patterns on oil. That's only applying, right, to oil. And of course, tomorrow morning, we'll be in our trade room, as always, 8 o'clock Eastern time. We'll open up our charts and we'll do it all together. So everything we talk about tonight, right, we'll have a front row seat tomorrow morning at 8 o'clock Eastern time. And again, it'll be very interesting to see what happens. I do a lot of these nightly newsletters ahead of major news, but this is really one of those kind of unprecedented times where tonight I'll do my best, right, to put together a plan for tomorrow, but be aware, over the next few hours, we're going to start seeing headlines that are probably going to shake everything up. So unfortunately, I'm going to do my best tonight, right? But like with any major news on the horizon, we could really be in store for a big shakeup if things don't go the way the markets are anticipating them here for tomorrow. Only time will tell. But let's not worry about that for now. Let's put together our plan here in the short term, and then by the time we get into our trade room tomorrow morning, hopefully that dust will have settled. If you're planning on trading the overnight in Asia and in London, I would imagine will be okay. But if you're planning on trading Asia overnight, I'd just be very, very careful because there's going to be a lot of uncertainty until all the polls are closed and everybody knows officially what's going on. By the time we open up in London, I would imagine 3 a.m. Eastern time, London open, I would imagine we're probably going to have a pretty good feel of what's happening at that point. We'll probably have most of the chaos been worked out by then. But be very careful, right, in the next few hours if you plan on trading this reaction. So let's jump in. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the euro. Crude, bearish. We have a channel, a potential triangle, and a measured move on the chart this evening. The bears have control. It's pretty obvious to see those bears with a nice strong move down, right? And they recently, as you can see here, just sold off, right, the top of this big, right, off this big bear channel. But what's interesting is one, the size of this most recent candle, right? And two, the way the market kind of finished right on top of that measured move and right where that trend line is, right? So it finished on a couple levels of support. Now, first of all, if we kind of dig in on this a little bit deeper here, right? First of all, the size of this candle. Let's talk about that first. The size of that big red candle. The reason why it's a big red candle there is we just got the weekly API report. It comes out every Tuesday at 4:30 Eastern time. But the why is not important. The big red candle, right? Whenever I see such a large red candle like that, I know there are going to be a lot of sellers who are waiting here now to sell into a pullback because they just simply don't want to chase, right, this move lower. Right, so I know there are probably going to be sellers up here waiting as we pull back to sell this thing back down, right? They don't want to chase it lower here, right? It's foolish to sell down here. What they'll probably do is try to get like back around the 02, right, and then look to sell up there. Now, also another big clue is with price sitting right at that measured move, along with that rising support trend line, I'll tell you, this really feels like a range is forming, right? Because with this much move down, you would expect them to have no problem finishing the day down around the low of day, right? With the amount of bearishness we saw during this, right, during the late morning, well, maybe not late morning, but mid-morning, right, which we saw on crude, you would think they're going to be finding an easy way back down to retest the low. So the fact that they couldn't, and the fact that they kind of finished right where this big measured move is, we've got that big measured move coming off the high. We talked about this in the trade room today, right? That measured move down there. Just the fact that it sat like that, it just kind of smells like a range right now. Which of course, that range would be a bear bias, right, into that trading range, right? So that's kind of what we're thinking right now. So knowing that, if we have sellers waiting patiently to sell high now, and this market is feeling like a range, whether you want to call it a triangle or a rectangle, this would be a triangle, then the best plan is to focus on buyer failures using the 1, 2 try failure pattern, selling off the high, using that battle zone I have drawn overhead, right? And then looking for targets at the low of the range and of course, right, back down to retest that major low. So that's going to be my plan here for tomorrow, right? But don't forget, tomorrow morning we have that oil news at 10:30. So our cutoff is 10 o'clock Eastern time. And so we know time is ticking. So make sure you're watching the clock here tomorrow morning. So most important clues right now: direction, bearish, location, at support. Not a good place to be selling. Where do we want to sell? We want to sell at resistance. And in my opinion, there's probably 2 ways to do this. One is going to be if we go up, 1 try, 2 try, failure back down, right? It may look something like that, right? 1, 2, back down, or like this, 1, 2, back down, right? So 1, 2, back down. Or what if we go lower? If we go lower, now we really want to try our best to sell high, right? And we'll just sell off of those resistance levels overhead. So those are pretty much my 2 options here on the oil. What's the first option? First option is we go higher. If we sit here and go nothing, right? We'll talk about that in a second too. You know, what if we sit here and go nowhere? But I'm looking for a 1 move up, right? I'd like to see this market go higher, get above the moving average. If I can get us above that moving average, then I can look for buyers to try to buy that pullback off the moving average. If I can get that, then I know I have some stops and I can sell right into those stops for a much more reliable way to sell high. Again, we have bears right now that are probably a little bit disappointed they couldn't get that short earlier. They'll be waiting up here to sell high, right? We can use that 1 try, 2 try, failure pattern, which we love so much, right, in our trade room every day. So 2 try failure, that's an easy way to sell it. What if we go lower here? If we go lower, this support trend line now becomes resistance. That is resistance. So if we go lower here, if we keep going lower now, right, now what we'll do is we'll try to get that. We'll try to get up, pull back, go, right? And ultimately the same basic pattern, because we'll probably end up getting that moving average coming down. We'll probably end up getting it back above that moving average at some point, right? That'll be 1 try, wait for 2 tries, and we can sell right into those stops, right? So relatively easy there as well. So last scenario you want to keep in mind is what if we go sideways, right? What if we go sideways? What if we sit here quietly for the next couple hours, right, as the election results come in? Then what do we do? Well, then we definitely have our eyes on this trend line overhead, because now that becomes a key component. 1 try, 2 try, and I can sell back down again. Let those buyers try it once, let them try twice, and then we'll sell right into those stops. Another thing you want to be aware of is what if we just run lower, right? Election coming out, what if it runs lower? If it runs lower and really runs, right? I mean, if it really starts running, no deep pullbacks, find that new spike in channel, most likely spike in channel, find those prior swings, and just wait for that pullback. Trap pattern into two-try failure, right? It'll be a combination of a trap pattern into that two-try failure pattern going down from there. What if we turn bullish? How would we turn bullish? Well, at this point, this move lower pretty much negated any strong move higher here. So in order for me to trust this market going higher, I'm going to need to see what we call that 1, 2, 3 reversal, which means we're looking for 1, a counter trend move, 2, a pullback to the moving average, and 3, a strong move off of the moving average. Remember, if we just get a strong move up and we pull back to that moving average, and a lot of people like me will be looking to sell this thing when it fails back down again using that two-try failure pattern. So what I want to see is I want to see it real strong coming off that moving average. Now we can mark up that high, we can mark up the new channel, and now we know exactly where we want to be buying. Just got to wait for that pullback and find the appropriate entry trigger. At that point now, if we can get long on this, man, oh man, this could be a really nice rally back higher. We've got a little short-term pit stop at 63.32, but there's no reason to think that if this sucker turns bullish, they might make a run at that 64.14 tomorrow for a nice big short covering rally. That's definitely potential with the election numbers coming out as we speak. So recap here real quick. We're thinking two-try failure pattern off that high. If not, break down, failure off resistance, right? Or do we turn into a spike and channel? Spike and channel pattern, trap, two-try, back down, right? Or do we see that 1, 2, 3 reversal, mark up the channel, mark up that high right there, mark that high up, right? And look for that buy off what we call a hidden channel pullback pattern. Only time will tell. But real quickly though, before I jump into the S&P coming up next, I want to remind you, especially if you're here for the first time today, we're going to cover a lot on this newsletter every evening, and I want to make sure that you get as much of a jump start on this as you can. Now, you could go back and watch all my previous videos. There's like thousands of them. I've been doing this since 2008 here on YouTube. I'll date myself there a little bit for you. I'm not a spring chicken with this stuff anymore. But the bottom line though is rather than having to go back through all my old videos, I want to give you a shortcut. And that shortcut, I'll give you a free trading class. I'll put it right in the upper right-hand corner here. You'll see a little pop-up come across there. If you're on YouTube, grab that free class, right? If you're on the blog right now, there's a big button right below the video on the blog. Follow that button on our blog at Sideways Markets, and that will take you over to our website where you can get in the members section, right, and then grab that free trading course as well. So grab that free class, not to worry, pause the video, right? I'll be here when you come back. That will definitely be a great use of your time. That way you can learn more about all these patterns and you can do it all in one location, right? Really, really easy for you. Okay, let's keep going. Got a lot to cover here tonight. We got the crude oil out of the way. How about some S&P? Yeah, so S&P is bullish, right? S&P is bullish with a strong run higher. Let's get that over here there. There we go. Right? Bullish, strong run higher, measured move, channel, and monthly high on the chart this evening. The bulls have the control, right? So the plan is to buy at support levels with the right entry patterns. And I have my eyes to find support levels. I've got my eyes on the low of this channel. I'm also thinking this range may come into play, and we may see it kind of rotate back down. We could buy below the low of that range. Okay, it's also important to remember that this strength going to the close today, if we continue going higher here, it's really important to remember we've got the monthly high there, right? I know we're only the 6th day of the month right now, but that's the high, right? Up at that 66.25 area. So if we do see it going higher here, we want to be very careful buying into that level of resistance. Instead, we're going to look left and find those traps, right, to buy as it goes higher, right? That's always a key component. You got to know where that level of resistance is if we go higher. So again, we know we're bullish. We want to buy at a support level right now. Where's our goal? Our goal is to get back up and retest that monthly high at 66 and a quarter. So where's my support levels? There's a support level. Want to buy off that channel low. Where's another support level? Well, we had this move up into this range here today, right? And of course, as always, one try, two try, failure below that range low. I'll tell you guys, you're going to love this two try failure pattern. We saw a bunch of examples today in our trade room, right? You can learn a whole lot more about that inside that free trading course in the upper right hand corner or below the video tonight. But I'm thinking down below that range down there too. So what are some options here right now? Well, let's dig in. Looking to buy at a level of support. What if price pulls back here for us? If we do get that pullback back to the low of that channel, we're going to be below the moving average, which means we have a great combo trade setting up here. I can look for a one try, two try failure, then into what I call a hidden channel pullback, right? Find that new channel and then buy that pullback from there. So those are two patterns here now we can look for. If we do get the pullback to the low of this channel, it'll be below the moving average. That's one try for the bears. Then we look for a second try for the bears. Once we have a second try, now we know where stops are, and we can buy into those stops, right? Once price goes higher, we don't want to buy up here though. Now the follow-up pattern, the hidden channel pullback. Find that hidden channel, buy that pullback. So if we get a pullback to the low of this channel, we've got two potential trades lined up here, a two-try failure and a hidden channel pullback. Good example right back here, right? There's your move lower, there's one try, pullback, two try, then up, failure, hidden channel pullback right there. I'm not making this stuff up, right? You can see these patterns happen over and over again. So two-try failure into hidden channel pullback, right, for that move going back up to retest the high. Now, the next thing will be, what if we really collapse lower, though? Because, again, I have a feeling this range might be in play, right? Take that range, copy and paste it down, copy and paste it up. We're right about there. So we may see this market really tumble as it goes lower. If it tumbles as it goes lower, if we tumble as we go lower here now, what's going to happen is you're going to see a lot of sellers. They're going to try to come in and sell that pullback. And if they're successful, that's great. It'll be a bear market. But until then, we're looking to buy those failures. So that will be the first try for the bears. Then we look for the second try here for the bears, right? Coming off that moving average. And now we know where stops are, right? Now be aware, there's a lot of nuances that I'm not going to give away on this newsletter. I'm going to give a lot of it away in that free trading class. Obviously, we'll teach more about this in our membership classes, but be aware there's a lot of different ways we use these two tries when we have a strong move down, right? One of which being a major two try, the other of which being, right, we call a nested two try. 1, 2, and go from there. So there's a couple different options we're looking for down here. We won't know until we get there tomorrow. So being with me in our trade room tomorrow morning will definitely be a big advantage because we'll know what it looks like at the time. But the bottom line is we do expect to get that deep pullback. If we do get it, I'm expecting sellers here to sell off of that moving average. Once we get that sell, again, one try, come back off that moving average, right? Two tries. Once we get that two try, then we know where stops are and we can buy right into those stops. If we do want to be a buyer after this market runs higher, just make sure that you're focused on buying as low as you can go, right? So find that new channel, right? Find that new channel. If I can draw here, right? And really make sure if you're going to buy here, you don't want to buy into this resistance right there, right? So make sure you're buying. Again, you've got two easy options there. Two try failure pattern, right, in that hidden channel pullback. Once we get down, right, into that battle zone below that range, that would really be where I think the best trade is going to come tomorrow, just because that would rope in some of those sellers, right? That's always the best time, right? That's always where you get the money. You know, like back here, right? Big strong move down. You can see those sellers, they tried to sell it, and once they figured they were wrong, they bailed and price jumped. That same thing happens. If we get that nice big move lower, sellers are going to go, oh yeah, sell that pullback. And once they fail, right, it just blasts higher. It's always got plenty of profit built into it because of that momentum that shoots back up to retest the high as those sellers get stopped out. Now, another thing we want to think about tomorrow, right, is what if the market keeps going higher here? right? What if it goes higher here? If it keeps going higher, we have to always know where's the objective, right? Where is this market trying to go right now, right? For example, back on the crude oil, we know the objective is trying to get back to retest the low. And the fact that they didn't get back to retest the low into the close today was a big, big clue. It also tells me if we go lower, I don't want to sell down here. I want to sell high, right, as we talked about earlier. So it's really important that we always know where is the objective. We had that big rally higher at the beginning of the month, and so we have to assume they're trying to get back to retest that 66.25. That's important because as we go higher here, we now know that instead of getting a pullback, it's a short covering rally. So we're probably not going to get a very deep pullback. We got to look to be more aggressive, right, and buy those traps below those prior swings. So how do you know when to be more aggressive? When you can see the market aggressively moving towards the objective. In this case, it's that 27.66. And again, with the election coming right around the corner here tonight, it's very difficult to predict this. But if we do keep rallying higher here, though, and we're not getting that deep pullback like I mentioned earlier, but if we just keep seeing buyers buying it up, well, now it's time to get more aggressive, or we're not going to get a chance to trade it, right? We want to look for that trap, right, and go from there and look for those traps as we go higher. So you know when it's time to be more aggressive when you start seeing that objective is only a few points away. You know you're going with that trend, and you're not getting any deep pullbacks. We're not getting below the moving average at all, right? That's when you know it's time to be more aggressive. Because if you don't, you're going to be sitting here and you're not going to get a chance to get on this move, right, as we go back up to retest the high. Again, we're not quite there yet, but we're looking to get aggressive once the market shows us it's time to get aggressive with that shallow pullback. Every time it pulls back, the buyers buy it, right? That's when you know it's time to be aggressive on this. Now, how do we turn bearish? Speaking of aggressive, how do we turn bearish here? It takes that 1, 2, 3 reversal, right? 1, strong move down. 2, pull back to the moving average. Now remember, if this was all you needed for reversal, well, now that would have reversed, right? So do not let a strong move lower fool you into thinking this is a reversal, because a lot of times those bears come in, they try selling that pullback, and you know what happens. Bam, right? It goes right back up, and we see those all day long, right, on all of these markets. If they can get the hold off of the moving average, now we have that 1, 2, 3 reversal. What's next? Did we chase this? No. We sell at resistance. We've marked that up as resistance. We find that low, create that channel, and now we know exactly where we want to be selling. Now all we need is the appropriate entry pattern once we get back up to retest those highs. We're looking for 2 try failures, trap patterns, and of course, right, nested 2 tries as well. Don't forget, you can learn more about all those patterns by taking our free trading class. It's linked up below the video on our blog or in the upper right-hand corner, right, of this video. Let's keep rolling. S&P is looking good here for tomorrow. How about that Nasdaq now? Boy, we nailed that little trap low on that Nasdaq last night. Beautiful move, right? If you watched last night's video, you were ready to rock at the opening bell today. How about the Nasdaq here? Nasdaq is bullish. Yeah, we're bullish, right, with a triangle or a range, a strong move higher, and a measured move on the chart this evening. Now, the bulls have control, but the high of this range, I try to kind of zoom out as far as I can on this, right? You can see this big old range here, right? And you can see how much further off the Nasdaq is than the S&P, right? The S&P is only a few inches, right? S&P's up here right now. S&P's trying to retest that high from early November. This is also an early November high, right? And we have to assume that's where those buyers want to go. We'll plan for that here in a second. But for now, though, we're not there yet, right? We're not there yet. We're nowhere even near, right, retesting that high up around 43, right, and 3/4. Bulls have control. It's very difficult right now to want to sell this market. The bulls have control. You can easily see that momentum coming off of this low. This pendulum is swinging higher here. So even though we're in a range right now, I really don't want to sell this market until we can see this thing kind of settle down a little bit, right? So you know what I mean. We have this market bullish, right? We pull back, slam it higher, pull back, slam it higher. Buyers are buying every little pullback here right now and running it right back up the flagpole. So I can't even think about being a seller right now unless we can start to see this thing start to mosey sideways here. Okay, if we spend a good half the day tomorrow morning in a sideways range here, I'm going to call it even, right? But for right now, though, we're way too bullish. And again, with the election right around the corner, or the results coming in around the corner here, I'm not about to start playing against that bullish momentum. So the bulls have it, but the high of this range, right? The high of this range, not exactly my cup of tea to start buying. So my plan for tomorrow is to buy the low of this range using that two-try failure pattern. We talked about this earlier, right? That two-try failure pattern, right? And of course, or waiting for more proof if these buyers want to go higher, right? If they do want to go higher, then they're going to have no problem showing me proof, and then we can look for that new hidden channel, right? We look for that run up to that 71.43. So again, looking at the buy side here right now, I really want to buy the low of that range. So how do we do that? Well, we look for first that move lower, right? That'll be our first try. We look for that pullback back to the moving average, right? That'll be our second try. And then once we see that second try, now we know where stops are. With the appropriate signal here now, we'll look for that buy going back up, right, to retest that high. Now, there could be some different variations of this, right? For example, sometimes we see what we call a two-legged pullback, which would be where we kind of go lower. We kind of stair step away lower here. 1, 2, and that kind of leads into, right, a two-legged pullback into a failure, into a hidden channel pullback, and we can go up from there, right? So those are kind of some patterns to think about tomorrow. That will be a two-legged pullback using that trend line as support, right? Again, because now you've got one try, two try. So if you can get that trend line, that'll work as support. Then you've got the two try failure, right? That, if I can draw here tonight, Joe, come on. You've been drinking tonight, son. What am I doing here? There we go. Get that thing flat. Bob Ross is totally disappointed in my skills right now. And then, of course, right, a happy little hidden channel pullback right off of that low. So we're talking as I channel my happy little tree here right now, right? Two try failure, right? Two try failure. Again, imagine now, right? Imagine now we come down. Let's get this out of the way. This was clean, right? Imagine now we come down. Right, we're stair stepping our way down, right? Level of resistance there. There's one try below the range, up, two tries below that range. I can use that trend line as support. Okay, now this will also, right, also line up for a two try failure, and then of course into that hidden channel pullback. Just make sure you're buying as close to the low of that range as possible, right? Two try failure, right? And we call that two-legged pullback using that trend line, right? Using that trend line as your level of support as well. Now, that's the easy part, right? That's the easy part if it gives a nice pullback. If we sit inside this range right now, stay away. One try, two try, buy it back up. Right? If we sit inside that range right now, let them try once, let them try twice, and we'll buy it as it goes back up into that range tomorrow. Now, what would it take for this market to break out? What does a buy high scenario look like? Well, it's very difficult right now to buy here because, again, we've got potentially a range, triangle, right? And, of course, we're expecting here to see that measured move. This is kind of the big scary level of resistance because you've got that trading range. Copy and paste the range down, that's support. Copy and paste it up, that's resistance. So, in all reality, this could easily be 1, 2, back down in, which I will look to take as a trade short, but I'm going to have to see it go once, pull up, and then it'll be the nested two try. One try, two try, and then failure back down. In other words, let them try to run higher, then once, twice, two tries to pull through. If we can't, at that point, now we look for that sell going back down into that range. That'll be a little bit on the aggressive side, right? Because obviously we're bullish right now. But again, it'll be what we call a nested two try, which you'll learn more about with me every morning in our trade room, right? That nested two try, and we'll look for that trap, right? going right back down into that trading range. A buy scenario here, we've got to ultimately get through this measured move. So what I want to see is I want to see us run through that measured move. If we can, now we can rely on the fact probably going to be like a hidden channel of some sorts, something like that, and we'll look for that pullback to buy right later on in the process. The key though is, guys, is that we're going to want to see this thing push through that measured move like a hot knife through butter, right? We want to see it push right through that measured move. If this thing looks strong but hits it and stays, nope, not there yet. How many times have we seen a range-bound market with a strong move and it looks like there's no way this is going to stop, and sure enough, it goes right back into the range? So it's important that we go through that measured move. Then from there, I'm going to look for a kind of a hidden channel there. I'm going to be kind of creative with it. I'll look for a channel there, and we'll try to use what was resistance now, right, as support for that buy going higher. And again, remember, right, where the objective is. Very important, remember where the objective is. Right now, the objective, right, is to get back up to retest that 71.43 3/4, right? At what point do you start getting real aggressive though, right? If it's not pulling back at all. If we're running and it's not pulling back at all, at that point now, any opportunity we get below that moving average, right, failure, it's a buy. Right? If it starts running, we're looking for that, like we saw last night, right? Little push below the moving average, failure, and buy. Right? Push below the moving average, failure, and buy. Right? If we end up really running hot here, right? Failure below the moving average and buy. Right? Well, shallow pullbacks. Remember, when we're seeing evidence of an aggressive market, shallow pullbacks. Every time we see a red candle, for example, right? You're going to know it's time to get aggressive when you see a red candle and buyers are buying those red candles. You know what I mean? Right? Like right here. Good, right there, right? Strong move up, red candle, buyers buy the red candle. That's all they're doing. Once they get a red candle, they're buying it. Now, you can't do that here now because we're not in a good location for it. But if this thing just keeps on cranking higher and you start seeing red candles are being bought up, right, like a Black Friday big screen television, right, at Best Buy. Is Best Buy even they in business still? They're still in business, right? I hope so, because those live streams on YouTube are quite entertaining on the Friday after Thanksgiving. Anyways, that's how you know it's time to get aggressive, and it's time to be more aggressive, looking for those little shallow pullbacks for those failure patterns from there. So Nasdaq's a pretty easy game right now. Just be careful out here the next few hours, again, with the election results coming in, right? Grab your popcorn, as they say, right? It's going to be important. We stay patient here. How about some gold right now? Gold is a very interesting chart. Gold is bearish with a trading range, a measured move, and a resistance trend line on the chart this evening. The bears certainly have the momentum at their back right now, right? The wind is on their side with the bears, but I'm not quite convinced that being a seller at the low of this range, I'm just not quite convinced yet. Remember, we have that range. There's that range we're talking about, right? Copy and paste it down, that creates support. Copy and paste it up, that creates resistance. So we just barely dipped our toe in the water just below that range expansion. Now, this could be a little bit election day jitters in all reality, because this is gold we're talking about, right? So this could easily be setting up for a nice big rally back into that range going higher. The problem, though, is, right, the momentum is just too bearish, right? I use the analogy of opening an ice cream parlor in January. And why do I say that? Why does that sound a good idea to you, right? Opening up JJ's ice cream, maybe some frozen yogurt. I love the froyo, you know me. I'm trying to watch my figure, right? But all kidding aside, though, right? If you were to open up Joe's, right? We'll call it Joe's ice cream, right? And froyo, right? Opening coming soon, January 1st. Am I going to see you there? Hell no, right? Why? Because who wants to eat ice cream? Actually, I probably would personally. I love me some frozen yogurt. But the bottom line, though, is you're probably not going to do very well You can have the world's best ice cream, right? Have some live entertainment. Man, it could be a great place. But if you open it up when there's 10 feet of snow outside, right, you're going to hear crickets chirping. But what if I change that? No, it's not January 1st. It's July 4th. That's right. We're going to open it up for the Independence Day holiday, one of the biggest holidays of the year, prime time summer. What is that? Yeah, you're going to crush it, right? You better have a lot of extra, right, ice cream on hand, because if it's good, you're going to sell a ton of it, right? So, what is the point I'm making here? Timing is everything. You can have a good idea, but if you don't time it right, you're still not going to make any money. Okay, this is a good example of timing is everything, right? Timing is everything. We know we have a range, right? And if you're thinking, well, we're below the range, buy this. Now, don't get me wrong. We might go right back up, V bottom right back up. But usually, though, what happens? Whenever you see a strong move in one direction, what happens? The bears are going to try to retest that low, right? That's their objective, okay? So strong move down, even though I want to buy this low, this range, I can't trust it because I'm expecting these bears with all that momentum, they're going to probably look left and go, there's resistance right there, right? And they're going to want to sell into that resistance. So there's basically two things I want here. I want to let these bears, I want to give these bears a little bit of the benefit of the doubt right now. Rather than trying to buy now, rather than trying to open up my ice cream stand on January 1st, let's wait until the timing is more in our favor. So here's what we know. Strong move down. Here are two things to keep in mind for tomorrow. One would be a retest of that low, followed by a strong move up, and we're buying that pullback, right? That's one I'm watching for tomorrow. That would be where we retest the low, right? Basically, that allows the sellers to do their job. Then we get back above the moving average, and we're buying it from there, okay? That's definitely the most conservative, very reliable too, right? There's nothing wrong with being conservative, guys, right? I take a lot of pride in the fact that in my trade room, I'm a stickler. I want the most reliable trades. I don't want to take losses. If you want a high winning percentage, then you want to stick to the conservative side. Remember, if you want to make more money, don't trade more often. Just trade a bigger position size. You can be conservative and still make your account grow like a weed. Just trade a bigger account. And because you're being conservative, your account will be bigger. It may not be as exciting like it is in the movies where you're buying and selling and right. It's all aggressive, but being more conservative is how a new trader grows, right? You can always be more aggressive. But if you're more aggressive early in your career, you'll be kicked out of this business just as fast as you started up, right? Trust me, I've got the blown accounts to prove it, right? I know exactly what not to do, and being aggressive early in your career is probably not a very good idea. So that's one scenario, right? One try, two try, we get that retest of that low, then back up above the moving average, and we're buying it from there. Then another option would be, right, what I call the nested two try, which would be that strong move down, then it's going to be that one try, that two try, and buying up from there. Right? So sellers will come in, they'll say, guys, we have a big strong move down. Let's try it here. They go, oh, shoot, that didn't work. That's okay. Try it again. Maybe this one will work. Right? That one doesn't work. Do you think the sellers are going to try again? Probably not. One try, two try, bam, back up. Once we get that nice strong signal, then we can look for that right. Then look for that move going back up into that range. So two basic options here. 1, 2, retest the low, pull back up. Other option, strong move down, nested 2 try, back up in. And again, I'm going to go over a lot more details of that variation tomorrow morning as it's developing. So again, an advantage of being with me tomorrow in our trade room. Now, you might also be thinking, well, what if it keeps going lower? Like, what if it keeps rolling lower here? Well, if it goes lower, then now we have that 1, 2, 3 breakout, right? That strong move down, pull back, and that breakout. If we see this thing just dancing lower here tomorrow, fine by me. Find that low, find that channel, right? You guessed it. Let's move this down a little bit here, right? So if we do see it, strength, pullback, strength going lower, yep, find that new low, find that channel, right? And now we're looking to sell off the top of that channel. And if all hell breaks loose, right? If all hell breaks loose and it's just tumbling, right? Mark up those swings, right? And again, traps, right? Traps. How do you know when it's time more aggressive? when every time we see a green candle, it gets sold, right? Every time you see a green candle, bam, right? Big move down, right? That's how you know it's time to be more aggressive, and that's how you know all you really need at that point, if we start just rolling lower here, is up, trap, right, and down from there. All right, guys, but again, that will be a little bit later on in the session because it will have to see proof of the aggressive market while it's happening. So those are two easy plans there, one for the bull side, one for the sell side, right? All we need now is see what we get here in the next few hours. Be careful again, like I said, right? Very enticing to do this overnight, but we have the election results coming in as we speak. Wrapping up tonight here on the euro. The euro's bullish with a spike in range, a support trend line, and a measured move on the chart this evening. The bulls definitely have the momentum, strong move coming up, right? So the plan is to look for buying opportunities at support levels. And I got a couple things on my radar right now. One is a spike in channel, which I'm still not convinced yet if this is a spike in channel we want to use, or two, it's a range, which I think fits better. That range has a range support level, a resistance level overhead. Again, take the range, copy and paste. That creates, right, support and resistance. So we're looking to buy low, right? That's the key. Now, as always, right, we always want to think about this. Where is our objective? We had that strong move up earlier in the week, right? That strong move up. This is the objective. We're trying to go back up to retest that high just shy of 15,000, right? So we know that's where they're trying to go. Why is that important? Because if it does keep going higher here in the wake of these election results coming in, now we know what we want to avoid, right? Buying high here. So let's play this game. What if price goes higher? What if price goes lower? I think it doesn't really matter, to be honest with you, if it's a spike in channel or not. If it is a spike in channel, we're still looking to go lower, one try, two try, and buy back up from there, right? So one try, two try, buy back up from there. If it is a spike in channel, right, we want to see it pull back, let those bears try once, let them try twice, and we'll go from there. Now, if it's a range, right, now we really want to pay a lot of attention to these prior swings down here, right? This 14,300 area be a big spot for us here tomorrow. Looking for that. Move lower, one try, two try, back up we go. All right, so that will be if it's a range or really a spike in channel here. If it's a spike in channel and we keep rolling higher here, again, it's not that, doesn't fit that well for a spike in channel, but if it is a spike in channel, then we know, find those swings. And how will you know it's a spike in channel? It'll rotate, right? It'll show proof, it'll rotate back up, come back down, one try, two try, back up from there. Okay, if it's a range, you'll know it's a range, right? Because it won't make it to the top of that channel, right? It'll go up and come back down. If that's what we get, we know we get a range now. Now it's one try, two try, buy off that low. Okay, now a strong move higher, right? A strong move higher that we start seeing, right? Every red candle is bought up, right? Now we know it's time to get more aggressive, because we know where that objective is. So if we start seeing this thing really start to run higher here, what's the plan? Look left, find those prior swings, and again, it's pretty much just traps, right? Traps, two try failures below that prior swing for that move up to that 15,000. All right? How do we turn bearish? Strength, pull back to the moving average, and then strength going through. Find that channel, mark that swing, right? And that's our chance to sell off the high, right, of that channel. Don't forget though, right, if it does pull back, do not assume a strong move lower is going to reverse, because you've got this trend line coming off the lows here. So again, another easy way here, right? 1, 2, failure, strength, hidden pullback. Hidden channel pullback for that move going higher, right? You're talking two try failure, right, into hidden channel pullback for the rally higher. And again, we've covered a lot in this video. Trap patterns, two try patterns, nested two try patterns, hidden channel pullbacks, right? We've covered a lot in this video. Don't forget, grab that free class in the upper right hand corner before it's too late. It's linked up below the video tonight on our blog as well. And don't forget, tomorrow morning, right? No matter who gets the election or whatever the result's going to be tonight, we will be locking it down tomorrow, like we always do, 8 o'clock Eastern time in our trade room. Learn more on our website, our beginner classes, right? Intermediate and advanced classes. Our advanced classes are by far our most popular. Those include all of our tools, all of our cheat sheets, all of our checklists, and of course, unlimited access to our trade room. To learn more, call the toll-free number or click on that video and watch the video. Get a great free trial, and I'm always here to help you out. Use that live support tool if you need to as well. Guys, enjoy the rest of your evening. Grab your popcorn. Don't stay up too late tonight, though. We'll get some work to do tomorrow. I will plan on seeing you tomorrow in our trade room bright and early. If I don't, come back and see me again tomorrow night, 8 o'clock Eastern time, before 8 o'clock Eastern time, right? Tomorrow night is our next edition of our nightly newsletter. My name is Joseph. Thanks for being here. Thanks for being great people. We'll see you guys next time. Adios, amigos. Bye-bye for now.